Thanks, Revati.
Other speakers, please go ahead. Yeah.
No,
You'll have to.
Yeah, we can try now.
The system.
The system thing.
Is it okay?
Yes, for that.
Private weather forecaster SkyMet has projected a dismal monsoon outlook for the next 4 weeks. In a forecast declared earlier today, SkyMet said the inadequate rains over the agricultural heartland of India could lead to big delays in sowing and could spell trouble for the economy. My colleague Sakshi Batra spoke to GP Sharma, President SkyMet, about the impact.
Image tells a spatial distribution of rainfall during this period, that is a 4-week period. It's largely month of June and also first week of July till 6th of July.
Okay.
This is the image between 9th of June to 6th of July. Okay. This is an extended forecast which is worked out based on the numerical models, giving a projection of likely weather conditions and the rainfall amounts quantitatively over different parts of the country. And as we see, it's a little alarming as far as the western, central parts, even northern parts are concerned, extending to even cover some eastern parts also in this. Rainfall are likely to be well below the norm. As it is, we know monsoon made a delayed start.
Yeah.
And after the start also, it's a little submissive, okay, very weak, where it matters most. Along the coast, it is progressed, all right. But then that's not all. Monsoon is all about reaching the interiors and giving decent and sufficient showers where they need the most. And that is where it's lagging. Okay. The distribution which we are given for the month, it is a combination of both the monsoon factors also based on the cyclone which we had and also the El Nino projections which were given. Today is 12th, another 3 days. Okay. But the monsoon, the pace at which it is moving a little sluggish, so we don't expect it pick up that also. So it's going to remain a little largely slower than what it should be. So the rains obviously will be lesser than what is expected and what are desired as well. Okay. So
Correct.
it's a little
Mr.
worrying.
Sharma, does
Yeah.
it also indicate that the chances of El Nino, which you have warned us earlier, are they going to get aggravated? And if yes, then how will it affect the monsoon progress going forward?
See, El Nino always, it's not very kind, most occasions. Okay, as we have seen in the past, at least in this century, starting with 2002, 4, 9, 14, 15, even 18 also, it
Yeah.
didn't spare us even on a single occasions. Okay, and
Virat,
Okay.
things are sorted. Please.
So thank you for taking the time off and coming here and be uh, party to something that we are trying to go into the banking sector. To begin with, let me give you, I think we are living in a very interesting times. I mean, in terms of you hear about a recession, you hear about inflation across the globe. And here we are in the country where both the inflation is under control, the fiscal deficit is within the budgeted norms, and perhaps the domestic consumption is giving us the GDP growth as well. So from that perspective, if you ask, that's a very, very different thing. And people today talk about India in a great way as to where all others are struggling. Perhaps we are making a good headway in terms of economic development. Banking sector per se is the fulcrum around which all the developments can actually prosper. And I think even from that perspective, if you really look at the banking sector has also kept up the pace. Means if you look at usually when you see a rising interest rate scenario, the delinquencies go up or the demand for the loans go down. Here, in spite of a consistent increase in the interest rates over last 15 months, we haven't seen much of a blip on the either on the delinquencies or in terms of the demand for the loan. There could be various reasons for that. I'm not getting into the details part of it, but at this stage, perhaps we are in the I would call it as a sweet spot for India and the banking sector in particular. We also observed that as the interest rate starts rising, perhaps the gap between the saving interest that you earn on your savings deposit versus the interest that you can earn on the alternate investment opportunities, mainly liquid fund, was widening. People were thinking what to do. And that's where perhaps the challenge for the low cost and stable deposits within the banking sector, growth rates started showing up. And this is the opportunity which we saw, and this is a situation that we saw and perhaps thought about coming up with a product which will solve both the issues that the customer has. Because as the interest rates goes up, perhaps FDs become the darling of the customers. But obviously with that, you have the inflexibility of getting the money when you need. At the same time, even you have the flexibility of doing a premature withdrawal, but it hurts you in terms of the penalties that are levied. We at Kotak have always believed in coming forward with the customer-centric products and make sure that customer can use it easily through our digital modes. And keeping these two factors in mind, what we analyze based on certain customer surveys that we did, the problems or the customer issues that we had, and here we have come up with a product which in our mind will change the paradigm of savings account in the country. Let me ask my colleague Rohit to take you through the specifics of the product per se, and then we can discuss any questions and the explanations that you want us to give. Thank you.
Thank you, Virat. Hi, guys. I'm very excited to talk about the new product launch that we're doing today. It's called the Active Money, and I will run you through a presentation which tells you about the rationale as to why we've kind of done that. Share the presentation. Yeah, screen. No, Can you guys see the presentation?
We have to go back to Zoom.
Share screen.
Yeah, just hit escape.
I've done it.
There are people online as well. So you need to share it on. So you can press escape. Go to Zoom.
Yeah.
Share. Go on, Zoom.
No? Okay, good. So what we stated as an ambition or the key vision at Kotak is to become a more consumer-centric bank driven by technology. And in the ambition of driving consumer centricity of the bank, we really try to understand how can we really solve the needs of savers in this country. And when we were looking at that data point, we realized that about 62 lakh crores of the consumer's money is actually lying across savings accounts. When you look at the total deposits, that's about 35% of the total deposits, which is there across savings accounts, term deposits, and current accounts. That's a sizable amount. And we all know that savings accounts actually earn about 3.5%. And in a high interest rate scenario as we are today, FDs earn significantly higher interest. And then we were wondering that why would consumers keep the money in low yielding savings accounts? And if we can do something to actually provide higher interest rates in the savings account, how would that be? And then we understood that there were two big reasons why consumers don't park all their monies into fixed deposits. The whole idea of liquidity. Savings, the reason why you keep money in a savings account is that when you need the money for any expense, any emergency, you should be able to withdraw the money at the same time. But if you were to have that entire money lying in fixed deposits and you were to break the fixed deposit before the period, you actually incur a breakage penalty. So that is the second reason. So it's all about liquidity, and it's about the fear of breaking an FD before its duration ends, and therefore incurring the pre-breaking penalty on that. And that's the reason why consumers keep 35% of the money which is lying with them in savings accounts, which actually yield significantly lower interest rates. So we want to solve this problem and give the consumers the opportunity to earn higher interest rates without losing the liquidity of a savings account and without incurring the penalty of actually breaking a fixed deposit earlier. And that's where to change this paradigm of the saving culture in the country to actually benefit the consumers by getting them higher interest rates in the savings accounts, we're launching this new product called Active Money. What is the Active Money? It's very simple. It is a unique product which actually gives you FD-like interest into your savings accounts. So how does it really work is that, if you have, so if you just go to the next time, come back to this. So how does it work? So if you, for example, have, a savings account with a minimum account balance requirement of 25,000, and let's just say you have a lakh in your savings account. So the difference between the minimum balance required and the money that you have in your savings account will actually move into a 6 months FD in multiples of 10,000 rupees. So for example, in this case that you see on the screen, if the minimum account balance requirement is 25,000 and you got 1 lakh rupees in your account, so 70,000 rupees will actually move from your savings account into this fixed deposit for a period of 6 months. And assuming you have a check which comes to your account for let's just say 30,000 rupees, then the 30,000 rupees will move from that 6 months fixed deposit back into your savings account. And the remaining amount of 40,000 rupees will continue to earn the high interest. The unique point is the fact that when you break this FD, you will not incur any penalty. So effectively, the FD balance and the savings account balance is treated as one balance together. And it's just that for the period that it stays in the FD, you earn the FD interest. But when you need that money, it just comes back into your savings account automatically without you having to do anything. And therefore, it provides you the liquidity. So that's really the way So that's really the way this product works. And it solves for the two problems I spoke about. First is, can I provide liquidity in a fixed deposit? And through this account, I can actually give her the higher interest of a fixed deposit, but give her the liquidity of a savings account. At the same time, if she has to break a fixed deposit and bring the money back into savings account, I charge no penalty. So this is a unique product where we're giving her the opportunity of earning FD-like interest while providing the liquidity of a savings account. And at this stage, we're actually the highest interest rates at 6 months level at about 6-7%. So that's what we are providing to her. 7% interest, up to 7% interest in an FD with the savings liquidity in the active money. So that's really the product construct. I think the big shift, or the big vision that we really have is that the 62 lakh crores, which is lying with consumers in savings accounts, we want to get them the opportunity of earning higher interest on that money in this high inflationary scenario by actually trying to move all that money into a product like active money. So that's really the vision that we have, benefit consumers with what they want and attract low-cost deposits into the bank using the active money as a product. So that's what I want to say. Anyone has any questions? Yes.
So sure, this can help customers better manage their liquidity. Have you mapped out how this impacts Kotak's own liquidity planning, given the sweep in, sweep out that happens constantly? Does it have a meaningful impact on how the bank thinks about its own liquidity management?
Yeah, I'll tell you. You see, in terms of, we have a robust model on liquidity management of the bank.
Sure.
The way in which we are treating this is no different from a normal 6-month TD that we have got. Okay. So that makes the life little easier. And so you're acting more on the conservative side when you plan it.
Okay. So you basically treat it as a 6-month FD right from the get-go. But without accounting for the sweep outs that could happen.
You see, we know what percentage can move out.
Right.
Okay, so there are models which we know at the back end which will work and say that, okay, if there is X balance, then X percent, Y percentage could be what we'll have to provide for that customer.
Right. And has this been piloted to some customers to derive those models, or how did you arrive at those?
No, you see, in terms of, we today do have this kind of a product.
Okay.
And so there is a history behind that, and we have a complete data to back that.
Okay.
So we're looking at both historical data and what we believe could be the incremental that we could get, depending on when you communicate this to consumers.
Sure.
There'll be some incrementality that you get.
Right.
We've taken both into consideration and come up with ratios in general.
Okay.
And so interest rate you have said up to 7%, and it will be on the FD of minimum 6 months, 180 days.
That's right.
So it can be below 7% also, and then the minimum amount which is required. For example, the example you shared of 25,000. For that 25,000, what would be the interest rate?
25,000 is the savings account, so it will on the savings interest.
Okay.
Okay. On the money which you have moved into the sweep. Okay. If it remains for 180 days, what it is designed for, you will get 7%.
Minimum 180 days.
Minimum. If I'm not saying minimum, it is theoretically maximum, because at 180 days, this will get back and flow back into the FDs. Okay. The question is the money will flow into the savings account, and it will again go back into at the day end into your new FD. So it's a 180-day product. Okay. At 180 days, it has got liquidated. To answer your question in the sense that if you want to use it, that's a flexibility that we offer. For the number of days it is remaining in the FD, you will get equivalent interest on that.
On
So
a pro rata basis.
No, if it remains for 3 months, then there is a 3-month interest on FD, whatever is payable, that will be paid.
At the rate of 7% per
Not
annum.
at 7%. At what is applicable for 3 months.
So are you sort of now essentially making current accounts an interest earning product? Because and how does it affect Kotak? Because those are zero cost accounts. So if you're giving interest rate on that, how does it?
Yeah. So it helps us from the fact that more customers will bank with us, and with this you will have more low-cost deposits also coming in to compensate for this higher interest rate that we might have to pay to the customers who use this. And for a current account customer, essentially it is what you call the usual churn that he has in his account. So from that perspective, it suits him that for whatever period he is not using the money, you will at least earn some interest on that.
And these balances that for current, say 50,000 rupees, that can be changed or that's fixed, like it has to be at least 50.
Look, it can go up. Okay.
Yeah, no, I'm-
Depending upon you what you want. No, there are different products that we will eventually come up with. Okay. To make just now the life simple, we have this. But there are, you see, we have different savings and current account products. So linked to product, there are thresholds linked to that particular products.
Thanks. Sorry to follow up, it's a quick follow up. In your conversations with customers, how much importance do they put to the interest that they earn in their savings accounts? I'm totally going off my own experience. I barely even notice the interest coming in because it's a very small. Is this something customers have been highlighting to you that they feel unhappy with their savings accounts interests? What is their outlook on?
So look, their behavior has shown us that. Okay. Means we never check, we never go and do the mathematics saying that, okay, did I get the promised percentage on savings interest rate or not?
Yeah.
But the behavior is that when the interest rate gap between the savings account and the liquid has widened, you see many people moving money into.
Sure, yeah, that has been going on.
So from that perspective, he is conscious about what interest that he's earning.
Sure.
Okay. He may not be measuring it or he may not be really worried about it in that sense, but the behavior shows a trend whereby he is moving money into the products which earn him higher returns.
So there's enough pull for a customer to buy.
That's right.
And you would assume that pull continues even after we see somewhat softer rates, maybe next year sometime?
Look, it will.
Okay.
It will. The degree can differ. Okay. And that's why you see currently you are at the peak of the interest rate cycle. So it makes sense to do it at this
the peak of it all.
And I think to build to what Virat is saying, what they say versus what they do is where you have to see this.
Okay.
Yeah, so there has been a movement of funds from savings accounts into high yielding assets like fixed deposits, liquid funds. And then the reason for that is what Virat explained, is the differential. So people understand that fixed deposits give high interest.
Right.
They don't calculate in their mind that, oh, I'm getting 3.5 and I'm getting 7 there. The difference is 3.5%. It is just that they know that it's a higher interest.
Right.
But at the same time, the savers then lose the opportunity that they keep their money in the need for emergencies.
Right. Yeah.
And they can't earn that higher interest. So we want to give them that opportunity.
Yeah, that liquidity management tool is.
Look, just now means many a times the consumers feel that, I don't need this money for maybe 6 months, 7 months, but I don't know if urgency comes in, what will happen. So rather, he was not putting it into an FD because it's a fixed thing, or if it breaks, there is a penalty.
Yeah.
Through this product, perhaps he gets away out of that problem that he has. So he can put in case if it doesn't happen in 6 months, in 5 months, the money is available for him to.
Yeah, however they choose to use it.
So you take away that pain from the consumer. The consumer doesn't need to think, what happens if I need this money. So he treats this account like a savings account, and he gets the interest of an FD.
Okay.
So you just make it very, very simple to the consumer, that let the movement between savings accounts and fixed deposit happen automatically without you having to worry that my money will get blocked for 6 months or blocked for 1 year. The money is with you when you need it, and still it'll earn higher interest than what it would have earned otherwise.
On the same.
But sir, some sort of consent would be required. Now the click, once you need to click, it will not happen.
No, this is customer has to opt for it. Customer has to opt for it. And even in our digital journey, yes, he will have to tick it and say that, yes, I'm wanting to opt for this product. It is not
for every time.
Not every time.
Amount also
No.
you need to choose.
You have to opt for whether you want to use the active money or not only once.
Only once.
Okay. Once you have chosen that, your threshold is fixed, that anything about 25,000 will be swept in. It will happen automatically.
So in, out.
Automatically.
Get calculated.
Unless you switch it off, saying that now I don't need this active money to be exercised, till that time it will continue. But the control is completely in customers' hand.
And we made, in our desire to be a more technology-driven brand, we're doing DIY journeys. So consumer doesn't, there are various ways in which the consumer can open. Go, if you're an existing consumer, you can go on your mobile app and you can click it and automatically it'll get activated. If you're a new to bank consumer, if you want to open a new account, you can come to the bank website, or you can come to the bank app open an account. When you open an account, you can actually activate the Active Money as a part of that. And once it gets activated, then you have a minimum balance requirement. The moment your balance goes above the threshold, it will automatically move out, and then it just manages automatically. So we're making it very digital. We're making it very user friendly. He or she doesn't need to go to the branch to activate it. That's not the only way. You can kind of do it through the mobile app. You can do it by calling the call center. There's an SMS that you can WhatsApp, and you can open it with that. Or, of course, the branch is there. If you want to come back to the branch, you can do that.
Just now you said that customer has to opt for the Active Money.
Yes.
Once that he has to take that.
Yes.
After that, the time period for the FD, that is about 25,000. So how he can decide that, or the bank will decide?
No. He's let us take this example. 25,000 is the minimum that he needs. Okay. So in the packets of 10,000. So every day end, when anything about 25,000 and greater in the packets of 10,000 will be swept into the TD, Active Money.
So by the default minimum period will 180.
180 days.
If I want to increase that period, then
No. So this Active Money is a 180-day product.
So to build on an example, sorry, I'll come to it. So let's say you have 50,000 into your account. 25,000 is the threshold. 20,000 will go into fixed deposit, Active Money, and the 30,000 will remain. Let's say you don't use that 20,000 just lying in the Active Money. Next, you get a salary at the end of the month. Let's say your salary is 70,000 rupees. So now 70,000 will also go into the Active Money as the next, a fixed deposit. So that's how those fixed deposits will keep on getting built. And when you need that money, or you a check, let's say you buy something and there's a check of 20,000 rupees, then it will come back from one of those FDs into your savings account, and the remaining money will keep on earning higher interest. So it's all automatic. You don't have to. You just decide the threshold is there, and after that, anything over the threshold will automatically go. When you need something back into your savings account because of a check hitting your account, it will automatically come.
so the customer will do normal transactions.
Yes,
Bank
yes.
will take care of
The back end.
Yeah, you
The
can
excess
even use it through the ATM. Okay, you put in your ATM card and want to withdraw, and it is going beyond 25,000. It will pull the money from there and give you. So for you, it is completely transparent.
Sorry,
What is the primary aim of the bank for introducing a product like this from a bank's perspective? Because we definitely have the sweep out facilities where customers generally have the ability to choose between which of the term deposit products tenors do they go for. In this case, it's fixed, if I understand that correct. But from the bank's side, is it so that the bank is looking at newer account openings really? You to Kotak Bank sort of customers through this, because the smart ones within your system have moved out to better yielding products or whatever avenues. So is it that, or is it so that even within your system there might be some people? How is it? Tell us that 34%. What does that 34% stand at your end? Really, and what sort of what's in it for the bank then?
So let me first start by saying that you want to do what is right for consumer. And this idea comes from the fact that there's an opportunity to give to every consumer the ability to earn higher interest while maintaining the liquidity of a savings account. So that's the starting point. First, keeping the consumer at the heart of thinking of this is the first thing. What is in it for the bank? We have a 2% share in the SA book. We want to get higher amount of low cost deposits. That is what that is the way we want to build. That's been our stated strategy, that we want to acquire more low cost deposits. So this helps us get more consumers from other banks or from other places where they've kind of kept their money, which is lying idle, and they can put into the savings account and earn higher interest rates. That is the strategy. How can we acquire more consumers from other banks, and consumers having money with them, which is not being used right now, but they want to keep it as reserve cash for any emergency, so that we can actually increase.
To Kotak Mahindra.
And we have targets, but those are, internal.
Internal.
So-
They are pretty aggressive at that.
It's a very important launch for us. We're actually going above the line communication after long with this product. So, next week you will see communication breaking above the line with this. And that is the importance of this product in our strategy of acquiring low-cost deposits.
And given this aggressiveness, where does it leave your cost of funds to at basically? Because you will be bearing more cost for the same amount. Like, of course, you have had a drain of money, but still you'll be bearing more. What does it do to the NIMs, which were industry leading with the last quarter?
So I'll first to the first question which he answered. The other important thing is that today within the savings account customers, one would usually have 2 or 3 bank accounts, and he's using one as his primary account and the others are secondary, where the money is parked. Through this product, perhaps our ambition is, and what logically will happen is that rather than leaving the money there, I'll bring it here and keep it so that I'll earn. So in that process, I've got the deposits. Okay. So that is one part of it. And that's one area apart from the new customers. Today, with this kind of thing, we'll be able to get significant amount of new customers who would start looking at us from a savings product point of view, or even a business customers from the current account point of view. To answer your question, our internal maths is that, okay, the incremental Ka and Sa that we will get through this product will more or less cover for the incremental cost that I will have to pay. That's the internal math. But there could be some slight increase in the margin. But that again, when you get new customers, you have the opportunity to do many other products to cross-sell. Okay. Today, by virtue of being my bank customer, I will be able to sell him either a loans or any investment product. So that's an added thing which we are looking at when you get new customers into the bank.
Of course, just to get it correct. So you're saying that, okay, it will help margins through cross-sell.
That it will support my coverage in case if we follow. At this stage, as I said, my maths is based on that the new customers and the new CASA that will come into the system, into my system, will cover for the incremental cost that I have to pay.
The module for the current account, the module for this saving account is slightly different. So you have to craft something different in terms of strategy for current account people to get into this kind of thing.
Look, honestly, if you ask me for a current account, it's a relatively easy thing. Okay, where I will say that current account pe interest dega, which is means, and you do it in the what you call typical current account markets. Perhaps the news spreads, and we will do obviously some kind of a marketing strategy where we will let them know also about it. So we will target those kind of say the Kalba Devis of the and Crawford markets of the world to really get this customers.
The volumes, they will be much bigger.
That's right.
And
yeah. So every city has got those kind of. In Bangalore, I will do this in Majestic. Calcutta, I have market. I'll do Paris Corner in Chennai. So all those typical current account markets, yes, we will do that.
Any other question? Anyone who's online? Does anyone have a question?
What is the current split of Ka and Sa in terms of percentage for you? Your total deposit?
At a consumer bank?
No, at total
20
bank level, if you ask.
As of 31st March, we can give.
No, he wants percentage. So I'm just doing a mental math on that. Just a minute. Give me a minute.
50% is current, 70% is
He's talking deposits including
TD. So there'll be
so 50%, around anywhere between 12 to 15% is current account. Close to around 33-35% is
Sa. The remaining is TD.
So it'll not be very different from what the industry is. Okay. So 15, 35, 50, that's a kind of. Yeah, correct.
Friends, if you don't have any questions, we'll just, I'll say thank you so much. Mr. Rohit Basin and Virat Divanji are going to be around for, if you want to ask some questions on the sideline, please. Mr. Virat Divanji, as you know, is Group President and Head of Consumer Bank. So feel free to ask.
So we can have a small interaction also.
Of course you can have, sir.
Okay.
Any question?
Online, anybody has a question? Kamakshi, anybody has said something in the chat? Thank you so much. And sorry for the initial technical glitch and the little delayed working lunch.
Thank you, guys. Thank you.
Thank you so much.
So we'll take this all in.
I just turn around every time and something shows up.
Of course.
Right?
Just pass it on. Pass it from there. Just can you pass it on, please?
The past few weeks have been marred by news of startup valuations being slashed by venture capitalists and investors. Swiggy's valuation was cut by Invesco, Byju's was slashed by BlackRock, and Meesho's was reduced by Fidelity. Now, these cutbacks are also expected to translate into lower returns from ESOPs, which were used as a means by these companies to attract top talent. Business Today TV's Akanksha Chaturvedi joins us with more on this. Akanksha, how will the valuation cuts impact employee ESOPs? What have you learned?
Well, in very simple terms, ESOPs are basically equity